If you're serious about building real wealth with private real estate, Fundrise or CrowdStreet might seem like the perfect solutions. But choosing the wrong one isn't just a misstep, it could be a costly trap. After investing my own money in both, I found one critical difference that changes everything. One platform protects your capital through diversification, while the other could expose it to total loss on a single detail. Let's expose how to avoid being caught in this investor trap. The truth is, Fundrise versus CrowdStreet isn't just a comparison of two apps. It's a choice between two completely different investing worlds, built for two different types of people. CrowdStreet is built for the accredited investor who wants to be in the driver's seat. Think of it as a high-stakes marketplace. You browse individual, large-scale commercial real estate deals, a new apartment complex, a development project, and you can choose to invest directly into that single asset. The appeal here is the total control and the potential for a high targeted return. You get to review the sponsor's full plan, the financial projections, and make your own call. It's a hands-on, pick-your-own-adventure model. Fundrise, on the other hand, is built from an entirely different mindset. It's designed for the investor who wants the growth potential of private real estate without having to become, a part-time analyst. It's built for accessibility, simplicity, and most importantly, safety through diversification. So whether you're accredited or not, you can start with a small amount, just pick a goal like long-term growth or supplemental income, and then their team builds a managed, diversified portfolio of properties for you. You're not just betting on one building, you're owning a small slice of many. This approach resonates with many investors I've come across. Take this investor, for example. He shared that Fundrise offered simple investment platforms with unique opportunities and even delivered better performance than his traditional equities. He also loved the opportunity of investing directly in Fundrise's success through their IPO. Then there's this other investor who simply called it a trustworthy company with an easy-to-use site for diversification. Yeah, that feedback mirrors my experience perfectly. So if you're not an accredited investor, the choice in CrowdStreet versus Fundrise, I think, is made for you, and that choice is Fundrise. But even if you are accredited, you have to ask yourself, do you have the time, expertise, and the stomach to vet each individual deal and take on that concentrated risk? For most people building wealth, the smart, safe play is the diversified approach, and that's where Fundrise is designed to shine. All right, now that we've seen how they appeal to different kinds of investors, let's look under the hood. What are you actually getting when you sign up? I tested every major feature, and the gap in who these platforms serve becomes even clearer. Fundrise's biggest strength is how it simplifies a complex asset class. It's not just a website, it is your all-in-one real estate investment hub. Let's start with the investment plans. This is the heart of Fundrise. You tell them your goal, and then they handle the rest. Want steady cash flow? The supplemental income plan focuses on dividends. Aiming for long-term wealth? The long-term growth plan targets appreciation. There's also a balanced plan and even a venture real estate plan and more customizing that you could do. I set up a long-term growth plan, and it automatically diversified my money across multiple e-REITs and funds. It was effortless, and I didn't have to choose things that I would be afraid of losing all the value. Then there's the Fundrise IPO, which I mentioned. So this is really interesting. It's kind of a game changer for these kinds of companies, and something CrowdStreet doesn't offer. It lets you invest in Fundrise itself directly. When you own a piece of the parent company, your interests are directly aligned with the platform's success. It's a vote of confidence in their model, and as an investor, I find that incredibly compelling, especially seeing how many users there are and how profitable they've been. One feature that I use constantly is auto invest, so you can just set it to add money weekly, bi-weekly, or monthly, starting at just $10, and it dollar cost averages you into the market without you ever having to think about it. I have mine set up, and it just runs in the background, building my portfolio. I don't even have to look at it anymore. It's just automatically working. For those who want more control and not like the absolute depth that the other one has, but like you want a bit more control than Fundrise gives you, there's something called Fundrise Pro, which will unlock some custom plans. This membership lets you break free a bit from the preset plans and build a more custom portfolio. But that's not all. You can actually pick which of their funds you want to own and set your own allocation percentages. So want to go heavy on the East Coast E-REIT and the Growth E-Fund? You can do that. You can even choose between dynamic allocation, which rebalances you toward your targets, or flat allocation, which just gives you specific percentages to put into each one. It's a powerful upgrade that bridges the gap between simplicity and customization. They also offer IRAs, both Roth and traditional. Rolling over a retirement account into private real estate is a huge strategy for tax advantages, and Fundrise makes it really straightforward. Now, to get a sense of what the broader investing community thinks, I always like to check forums like Reddit, where you get a lot of honest reviews and comments there. And when I was there, I came across a thread where someone was genuinely on the fence about it. He asked, "Is Fundrise even worth it?" And one longtime investor here broke it down perfectly. He explained that he had been fine with Fundrise so far, having started investing very early and remembering major market downturns. He specifically valued Fundrise for diversification. He pointed out that while the S&P 500 is a great benchmark, a significant portion of it is tied up in like just this small handful of tech stocks. For him, private real estate and Fundrise's venture fund were tools to counterbalance that concentration. And here's the crucial part, right? He stated that Fundrise had outperformed other alternatives he had tried. Like, if you actually put money into specific stocks or specific buildings, you might have made the wrong choice. But if you diversify, the market in general goes up and you'll end up making more money that way, at least statistically. CrowdStreet, on the other hand, does have a clear value proposition for a specific type of investor, and it meets it very well. Looking at their model, they position themselves around what they call the three cornerstones of private market investing: income, growth, and preservation. This framework is central to their pitch. So for each individual deal on their marketplace, they and the project sponsor present how that specific building or development project aims to deliver on one or more of these goals, whether it's generating immediate rental income, aiming for value appreciation upon sale, or focusing on capital preservation in a stable asset. But with Fundrise, their team does that heavy lifting for you across an already diversified portfolio. So for me, that's just a massive weight off my shoulders. I don't need to look for specific projects to put my money into. It's already done. But like, of course, no platform is perfect, right? So if you want to make the best Fundrise versus CrowdStreet decision, you're going to need to know the potential downsides. For Fundrise, one major critique I've seen is that the investment options aren't really easy to understand and not as transparent as they could be. And I get that. Like, private e-REITs and interval funds aren't as simple as buying a share of Apple. Like, you know what you're getting when you just buy a single share. But Fundrise does offer tons of educational content, pretty clear fund descriptions, and a very helpful support team. So I do recommend looking more into it instead of just passing it by. And once you spend a few hours learning the basics, it becomes pretty clear. It's a small learning curve for a much safer structure, but it is something to note. Now, the downsides I found for CrowdStreet are a bit more serious for my type of investing. One investor reported a devastating experience, stating that he had lost 100% of principal on one deal and had another development project now in litigation. His stark warning was clear. He advised others not to invest through CrowdStreet because there are no proper safeguards in place to vet deals, causing him hundreds of thousands of dollars in loss. So yeah, this isn't just a complaint about fees or a clunky interface. It's a report of a total unrecoverable loss on an individual investment, which is the inherent and severe risk of the single asset model when you put all your money into one project. While CrowdStreet does offer these high potential deals and offers you an immense amount of control and diversification with all the time spent and all the details that you can look into, and you can buy individual projects, it really also demands you to spend that time and to be your own risk manager and really understand what these projects are about. For every success story, for every profitable person, for every major win, there's the potential for a total loss on a single investment. In the Fundrise versus CrowdStreet debate, I think this risk factor is impossible to ignore, and it's why I'm so cautious about the marketplace model of CrowdStreet. When it comes to cost, though, Fundrise has this clear all-in-one structure that's built into the returns you see. They charge an annual advisory fee, which covers all of the management, acquisition, and due diligence work, as well as the app and the software and everything else you get. There's no extra burden on you to pay extra or to calculate these complex sponsor fees or profit splits on a per deal basis to figure out what your profit is. For the hands-off diversification that you get with Fundrise, I find it incredibly reasonably priced, especially for the non-accredited investors getting into this space. For the latest deals and for the latest Fundrise fees, minimums, any promotions going on, make sure to check the link in the description of this video. I'll try to keep it updated so you can always get the best deal possible. So, after testing both platforms side by side, where does this CrowdStreet versus Fundrise battle leave us? Well, if you are an accredited investor with deep expertise in real estate and you want to spend the time and you want to, sit down for a few hours vetting individual deals and you really want to find that perfect deal for you, and you accept the risk of a single project failing, then, CrowdStreet does offer that direct access, and it's really great for that purpose. But I think for the vast majority of investors, including accredited investors who value their time and their sleep, and they don't want to have to worry about a single project going down the drain, I think Fundrise is the clear, smarter choice. It provides professional diversification, lower barriers to entry, crucial liquidity features, and it aligns its success with yours through the IPO. So to get started and see their current investment plans, use the link in the description below.